The stock market taking a little bit of a breather after hitting record highs in terms of the S&P 500 and the Dow last week. Well, let's get the market outlook from Jacob Walthour. He is the CEO of Blueprint Capital Advisors. So thank you for joining us.
Thank you. I appreciate the opportunity to share my views with you.
So I have a little bit of a curveball at the top. We have the stock market near record highs. We got Bitcoin at record highs. What's the better long-term play? Stocks or Bitcoin?
Actually, I like both. And I'll be honest with you, I was not really a fan of investing in Bitcoin for the last, 2 or 3 years. And despite my kids telling me that it was the place to be, and based on the returns that have been experienced there, it clearly has been, I sort of avoided it because I just didn't think there was enough safety around Bitcoin as an asset class. But over the course of the last 3 or 4 months, I've been dabbling in Bitcoin, as have a number of institutional investors and companies with their balance sheet. And so I'm feeling more comfortable with Bitcoin as a position. And I think that at 60, we'll probably rest here for a little while. But I do think that Bitcoin has some room to run as more institutional investors and companies get involved with Bitcoin from a transaction perspective, but also as a place to store a portion of their balance sheet.
All right, so let's talk about the stock market. According to Refinitiv IBES, the S&P 500 is expected to see earnings growth of 25% this quarter, or for the first quarter, leading the pack in terms of earning growth expectations, financials, and consumer discretionary. So I'm wondering, if we did not get as bad in terms of the economy as people thought we would, does that mean the upside for earnings potential for the financials is not as robust as some might think?
Well, I think we're seeing the largest earnings estimate revision for financials since we've seen since 2001, 2002. Clearly, a part of that is the fact that views were depressed because a lot of people thought that the banks would struggle. As individuals and companies found it difficult to get through the pandemic, that their loan books would deteriorate, and they'd be sitting on a lot of non-performing loans. Well, that hasn't been the case. And I think we owe a lot of that to the federal stimulus packages, which has put liquidity into the hands of individuals and companies and strengthened their balance sheet. So many of them have been able to stave off default and stay current on their principal and interest payments. But with respect to financials, I think one of the things that it's going to benefit from, and one of the reasons why you're seeing such a large revision, is one, we're starting to see higher interest rates. And a portion of their loan book is going to be more profitable as the interest that it charges its customers is based on a variable rate. And given a higher rate is here today than it was a year ago, you're going to see a boost to their income. Secondly, you're going to see some reserves freed up that are not necessary for non-performing loans. As I talked about earlier, companies and individuals have been able to survive on the back of PPP and other stimulus programs, and so they're going to be able to release some of their reserves. You talked about the stock market hitting record highs. Well, that's good for trading revenues. And I know that on the fixed income side, they're seeing record trading revenues. And so I think there's a good amount of activity going on in the market nowadays that has financial services companies, for the most part, looking a lot better from a perception point of view than they were a year ago. Now, longer term, I am concerned about how quickly they re-engage and putting new loans on their books. At the end of the day, after we get through this earnings season, we're going to need something to lift us up for the next 2 quarters or next 3 quarters. And I think that's really going to be highly dependent upon whether they see a growth in their loan books.
So going back to the earnings expectations, the market has priced in, I guess, 25% earnings growth. So what happens when we get these earnings numbers? Does it just confirm what the market already expected, and so we don't get a pop in terms of the stock market?
Sure. Well, we don't know yet if earnings are baked in. Now, so analysts have revised their estimates to what they think the picture is going to be. Now, when the actual numbers start coming out, we'll see whether they exceed those new expectations or whether they fall short of those new expectations. If they fall short of those new expectations, we could see a down leg in financials. If they exceed the revised estimates, then we could see, a little bit more of a leg to this rally in financials.
All right, I always like to get some buying and selling picks here. So you are interested in buying tech, but you're looking for a 10 to 15% fall before you do so. That's a correction. We haven't seen many of those.
We have seen many corrections, but I think it's one of the reasons why we are experiencing this sort of trading range is because investors are worried. I mean, the market has had a V-shaped recovery, and stocks have rebounded a lot faster than anyone expected. And I think that nervousness is giving us a reason to think that the market may be getting a little tired, investors may be getting a little jittery, and the next big leg may be down before it's up again. But having said that, we call that a benign correction, where we get the nervousness out of the market and it sets the stage for higher highs. And so we are a big believer that in the second half of 2021, you're going to see a significant uptick in economic activity. You're going to see a reduction in social distancing guidelines, and you're going to see more from the consumer as they begin to spend their stimulus money and as many begin to re-engage in the economy in a significant way. And so we think the second half, after that benign correction, is going to be a powerful leg up in the stock market.
All right, great. Blueprint Capital Advisors CEO Jacob Walthour, thank you for joining us. I'm Conway G. Gittens, and this is Reuters.